Welcome to Newsbeacon, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. August 7th, 2025. A date that will be remembered in financial history, not for a market crash or a sudden boom, but for a seismic shift that sent shockwaves through the global economy. On this morning, a headline from Beijing rocks the world. China and its major trading partners announced that all future energy contracts will be settled in the digital yuan. The US dollar, long the king of global trade, is suddenly no longer required for these massive transactions. This isn't just a minor policy tweak, it's a direct and open challenge to the US dollar's global dominance. The world's financial order, built on the greenback, is being questioned in real time. For decades, the dollar was the world's default currency, the foundation of American power and influence. Every major deal, every oil contract, every international loan, almost all were priced in dollars. But today, that foundation cracks. The unthinkable is happening before our eyes as the world's trust in the dollar begins to erode. Traders in New York, London, and Tokyo scramble to grasp the implications. Phones ring off the hook, analysts pore over charts, and uncertainty ripples through every major financial center. Is this the end of the dollar's reign? The question hangs heavy in the air as markets react with confusion and fear. Imagine a town where everyone uses tokens from one powerful family, until a rival family convinces the biggest merchants to accept their tokens instead. Suddenly, the old tokens lose their magic, and the balance of power shifts overnight. That's what China just did on the world stage. With a single announcement, they've rewritten the rules of engagement for global trade. It's a declaration of economic independence, a bold signal that the world no longer has to play by America's rules. Other nations are now watching closely, weighing their own options. The silence in newsrooms is deafening. Journalists and editors, usually quick to analyze, are momentarily stunned, realizing the magnitude of what's unfolding. This isn't about a single trade deal, it's about the very architecture of the global system. The pillars that supported decades of economic stability are now being tested. Beijing's move is subtle, but its message is clear. The era of unquestioned dollar dominance is over. The digital yuan is now a contender on the world stage, and its influence is only beginning to grow. The world is now on notice. Every government, every central bank, every multinational corporation must rethink their strategies in this new reality. The rules of global finance are being rewritten, not in boardrooms, but in real time, across continents and currencies. The questions are urgent, but the answers are uncertain. Something fundamental has shifted. The game has changed, and no one knows exactly what comes next. A new, more uncertain chapter has begun. The world holds its breath, waiting to see how this story will unfold, and who will write the next rules of global finance. How did the dollar become king? Why does the world trust a piece of green paper more than any other currency? The story of the dollar's rise is a tale of power, strategy, and global transformation. It all began at Bretton Woods in 1944. In the aftermath of World War II, world leaders gathered to rebuild the shattered global economy. They made a bold decision. Most major currencies would be pegged to the US dollar, and the dollar itself would be tied to gold. This new system promised stability in a world desperate for order. With this move, the dollar became as good as gold. It wasn't just America's currency anymore. It became the world's reserve currency, the backbone of international trade and finance. This gave America a unique advantage. The US could buy goods and services from around the globe using its own currency, and it could run trade deficits without facing the usual economic punishment. The dollar's special status fueled decades of prosperity and growth. The world needed dollars to do business, so countries kept buying them, investing in US assets and financing America's growing debt. This cycle propped up the US economy and made the dollar indispensable. But in 1971, everything changed. President Nixon shocked the world by severing the dollar's link to gold, ending the gold standard. Suddenly, the dollar was backed only by faith in the US government and economy. Many feared this would spell the end of the dollar's reign. Markets panicked and headlines warned of a looming crisis. The world held its breath, wondering if the dollar would collapse. But America had another card to play: oil. The US struck deals with major oil producers, ensuring that oil would be traded exclusively in dollars. This move created the petrodollar, giving the dollar a new foundation and cementing its global dominance. These strategic alliances kept the dollar at the center of global finance. The next chapter would solidify the dollar's supremacy and set the stage for today's economic battles. The dollar's supremacy wasn't just luck, it was built on global trust, America's economic might, and a series of shrewd, sometimes controversial deals that shaped the modern world. But every system has its limits. Over time, the cracks began to show, signs that the dollar's crown might not be permanent. As America's debt soared and new economic rivals like China gained strength, doubts about the dollar's future started to grow. The world began to question whether the dollar could remain unchallenged forever. The world's faith in the dollar was never absolute. It was always a calculation, a bet on America's continued power and stability. Now that calculation is changing. New powers are rising and the global financial landscape is shifting in unpredictable ways. The consequences of these changes could be historic, reshaping not just America's future, but the fate of the entire world economy. After the gold standard collapsed, the US dollar was left adrift, searching for a new foundation. The world needed a stable anchor for global trade, and America needed a way to maintain its financial dominance. The answer emerged from an unlikely source: oil. In the turbulent 1970s, the United States struck a historic deal with Saudi Arabia. In exchange for military protection and political support, Saudi oil would be priced exclusively in US dollars. This agreement was more than just a handshake. It was a strategic alliance that would reshape the global economy. Soon, the rest of the OPEC nations followed Saudi Arabia's lead, agreeing to price their oil in dollars as well. This move cemented the dollar's role at the heart of the world's most vital commodity market. Suddenly, if any country wanted to buy oil, it first needed to acquire US dollars. This requirement created a constant, insatiable global demand for the American currency. The result? The dollar remained strong and resilient even during periods when the US economy faced uncertainty or downturns. The world's thirst for oil kept the dollar in perpetual motion. Oil exporting nations, now flush with dollars, didn't just let their profits sit idle. They recycled much of this wealth by purchasing US Treasury bonds, effectively lending their earnings back to America and helping to fund US government spending. This petrodollar system became a powerful closed loop. Nations bought dollars to pay for oil. Oil producers bought US debt, and America could borrow at low interest rates, fueling its growth and influence. For decades, it was a perfect system, at least for the United States. The dollar's dominance seemed unshakable, and America's economic advantage was unrivaled. But now, a new challenger has emerged. China is actively working to break this system by enabling energy trade outside the dollar, using its own currency, the yuan, for major oil deals. Beijing's move isn't just about currency, it's a bold play for global power and influence, aiming to reshape the rules of international finance. The petrodollar era, once thought invincible, is now under siege as new alliances and rival currencies threaten its foundation. The world's economic engine is being rewired, with new players and new rules challenging the old order. America's financial advantage, built over decades, is no longer guaranteed. The future of global power is up for grabs. China has been preparing for this moment for years. The 2008 financial crisis exposed their vulnerability to the dollar system. Beijing responded with a long-term plan: promote the yuan, build new financial institutions, and develop a digital currency. Currency swap deals let countries trade in yuan, bypassing the dollar. The Asian Infrastructure Investment Bank and BRICS Bank lend in yuan, not dollars. The digital yuan allows instant, cheap international payments, no US-controlled SWIFT system needed. Now, energy deals in digital yuan are the culmination of this strategy. China is offering a real alternative to the petrodollar system. The world's financial map is being redrawn. The yuan is no longer just China's currency, it's a global contender. Beijing has loosened controls, making the yuan easier to use and trade worldwide. The goal? Make the yuan a global reserve currency, chipping away at the dollar's dominance. Getting the yuan into the IMF's special drawing rights basket was a major milestone. China built CIPS, its own payment system, so countries can trade in yuan without touching the US financial system. For sanctioned nations, this is a lifeline. The digital yuan is the game-changer: instant, frictionless cross-border payments, no intermediaries, no fees. Two companies, one in Brazil, one in Indonesia, can settle a trade in seconds. China isn't just offering a new currency, it's offering a superior system. Political will, institutional backing, and technology make the yuan a formidable challenger. The dollar has never faced a rival like this. The world is taking notice. America's spending has long been underwritten by selling Treasury bonds, IOUs, to the world. China, once our biggest buyer, is quietly pulling back. Instead of dumping bonds and causing panic, they're letting them mature and selling gradually. This slow retreat is dangerous. Fewer buyers mean higher interest rates. Higher rates make everything more expensive: government debt, mortgages, car loans. China's shrinking appetite for US debt is a powerful form of leverage. The threat of a major sell-off hangs over every negotiation. As China reduces its exposure, America's vulnerability grows. The safety net is disappearing. The era of cheap debt is ending. The consequences could be severe. The dollar's dominance has been a cornerstone of US power and of America First politics. Trump's playbook relies on the dollar's strength: tariffs, sanctions, and financial pressure. But China's parallel system weakens these tools. Every new yuan-based deal erodes US leverage. In a trade war, China can accelerate its move away from the dollar, sell US debt, and rally allies. The risk: US policies meant to project strength could backfire, triggering inflation, higher rates, and a weaker dollar. The old rules no longer apply. America's leaders face a new, more complicated game. The dollar won't collapse overnight, but even a slow decline could be devastating. First, the cost of living would rise as the dollar weakens and imports get pricier. Inflation would hit American families hard. Second, interest rates would climb as global demand for US debt falls. Mortgages, car loans, and business borrowing would all get more expensive. Economic growth could slow, and jobs could be lost. Third, America's global influence would shrink. The dollar's power funds our military, our diplomacy, and our sanctions. A weaker dollar means tough choices at home and abroad. The world could splinter into competing currency blocks, making global trade more volatile and unpredictable. The transition would be rocky, with shocks and friction along the way. The dollar's privilege was never guaranteed. The stakes are higher than ever. The message from Beijing is clear: the dollar's era of unchallenged supremacy is ending. China has built the infrastructure, alliances, and technology for a real alternative. The world is being forced to choose. Watch the energy markets. If Saudi Arabia moves away from the petrodollar, it's seismic. Track central bank reserves. Declining dollar holdings signal a shift. Monitor adoption of China's CIPS and digital yuan. This isn't a partisan issue. It's a national security and economic reality. America must respond with strategy, not just rhetoric. The world's financial landscape is changing fast. Are we ready to adapt?